Morning, Steve Reed in Chicago with the morning grain comments. Well, today we're trying to pick up the pieces following yesterday's sharp sell-off in the nearby beans and nearby corn. The sequence of events yesterday, initially we heard rumors that maybe China might sell some of their soybean reserves into the domestic market. I think the market took that as a potential for lower imports. Seasonally, China does sell some of their reserves into the domestic market to change the quality and replace it with imported beans. But anyway, it caused the market to start to break. Noon maps hinted that maybe the northwest corner of the Midwest and southeast corner of the Midwest might have better rains over the next week than what was thought, and that also weighed on the bean and corn market. And then finally, we're seeing as we approach expiration of the August options and first notice in the August contracts, more and more liquidation out of those contracts. So we broke pretty hard yesterday. Overnight, August beans are still down pretty sharply, but November beans are trying to bounce off yesterday's weakness. Corn's about unchanged, a little bit higher, and wheat's up a little bit. In the individual markets, we saw a private estimate of the Iowa corn yield a little bit lower than was expected as they toured the crop yesterday. The USDA is out there this week looking at crop conditions and trying to come up with some numbers. Still, yield around 150 would add to the U.S. carryout and still could offer some resistance to the December contract where it is. Beans, they're going to need a rain in August. They're needed to make the crop. And right now it looks like northwest corner and the Delta should get normal rains, but we'll have to watch Iowa, Illinois, and Missouri to see if they get the rains in August that they need to produce a normal soybean crop. Over in the wheat market, we're seeing a little bit of firmness in the Kansas City spread. Some people are thinking that maybe China, Egypt, and Iran will take more world wheat than what the USDA is suggesting. And also the heavy wheat feeding that's going on right now domestically before the U.S. corn harvest could tighten up hard red winter wheat stocks, and that's offering some support to the spreads. Also yesterday we saw mixed reviews of the North Dakota wheat crop on the first tour of their annual tour. One car saw better yields than last year, another car saw yields below last year. And so there is a feeling that the spring wheat yield is probably a little bit lower than it was last year just because the crop got planted late. So again, a mixed trade, nearby beans under pressure. New crop trying to bounce off yesterday's low, corn and wheat a little bit higher. China PMI data came out lower than expected, but markets are finding support from talk to Beijing. We'll try to keep their annual GDP growth at 7% or higher. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.